What's up everyone, Bret here and welcome back to the channel. Today I'm going to be teleporting myself to 2030 to let you guys know the lottery numbers and the best stocks to buy for guaranteed returns. Okay, not exactly, but that would be really cool. And if anybody does know how to do that, let me know in the comments. In all seriousness though, today's video is looking at the top investment themes that are likely to shape the future of investing over the next 10 years. And as the legendary Bill Gates said, we always seem to overestimate the amount of change that's going to happen in the next 2 years and underestimate the amount of change that's going to happen in the next 10. Now, I'm definitely not going to try and play the role of a psychic today because one thing is for sure, and that's that within investing, nobody knows for sure what's going to happen in the future. So today's video is more about looking into the future, considering what might happen over the next 10 years and helping you decide where to put your hard-earned cash. Now, before we jump into it, I want to let you know that I've started using a new trading account. The trading account is called Trading212, and I'm slowly migrating my money from Revolut over to my new account. The main reason I've started using these guys is because they allow you to buy ETFs, which Revolut didn't, and it always bummed me out. If you guys are interested in joining me and you use the link down in my description to sign up, you'll get one free stock worth up to £100 when you fund your account. And if you're not already, guys, please go and subscribe, give this video a like, and let me know in the comments if you have anything to say about it. It really helps me grow my channel, and yeah, thanks. All right, now let's dive into it. The first investment theme, and coming in at number 1, is that the big will continue to get bigger. When we consider market size these days, size definitely matters, and that is true in most industries, but particularly, for example, in online advertising. The likes of Google and Facebook have an enormous share of this market. And in fact, in 2019, they're estimated to control around 37% of this market, up 33% from 2007 when they controlled more like 4% of the market. Now, considering that Google, known as Alphabet, owned YouTube, and Facebook owned the 4 most downloaded apps of the decade, which are Instagram, WhatsApp, Facebook itself, and Facebook Messenger, it's no surprise that these guys own such a large share of the market. Equity analysts have explained that it's due to their size that they're able to drive the best returns for advertisers. And the reason for this is because they're driving more usage and more targeted ads to their users. Statista.com think that worldwide ad spending is going to continue to increase. In 2018, it was 283 billion, and they expect that by 2024, it's going to be more like 526 billion. And guess what? Where do you think most of that money is going to go? Yep. Also, there's a perceived preference from customers to edge towards these huge social media giants, making it really difficult for new, smaller players to eat into the market space. And as the likes of these big guys like YouTube continue to grow, they'll be able to lower their costs, reinvest that money into improving their content and attract more users, just making them bigger and bigger and bigger. So yeah, don't be at all surprised if these huge companies reach new heights over the next 10 years. And then coming in at number 2 is that content is king, but streaming is the kingdom. There is no doubt that content creation is going to continue to grow, especially with individuals like myself having access to create higher quality content at lower and lower prices. In fact, an article from Capital Research suggests that the shift to consuming content via streaming sites has only just begun, and that currently 1/3 of all streaming is currently consumed from streaming sites, but by 2030, they reckon that it's going to be more like 80%. The leaders in this space are, again, huge companies. Number 1, obviously, Netflix, huge in this space, Amazon Prime as well, and more recently, Disney+. And of these companies, in 2020, Statista.com estimated that Netflix had around 187 million subscribers worldwide, and that by 2025, this will have increased anywhere to between 238 million and 258 million. They also estimated that Amazon Prime currently has 100 million subscribers, and again, by 2025, that this will have increased to anywhere between 134 and 131 million subscribers. And then Disney+, which is, as I mentioned, the newcomer to this space relatively compared to the others, will see the largest growth of around 100 million new subscribers in just the next 5 years alone. I myself definitely won't be contributing to this, or at least that's what I'm trying to tell myself, because I've made myself a rule that I should create more than I consume. So I'm going to be spending all of my time creating new videos rather than sitting down watching Netflix and consuming it. Having said that, I recognize that I'm the minority and that all the signs are suggesting that more and more people are going to sign up to these online streaming services. They can be so much more convenient than standard TVs that have been dominating people's leisure time for decades now. Decades? I can say that, right? It's definitely decades. It's definitely decades. Taking spot number 3 then is the idea that self-driving cars are going to rule the roads of the future. With AI advancing rapidly, which we've already seen by the continued growth of the world's largest companies like Amazon and Facebook, I don't think it's crazy to assume that autonomous vehicles are going to be extremely common by 2030. Machine learning is already all around us, especially, by the way, on YouTube. So please go ahead and smash that like button and make sure you subscribe to help me with the almighty YouTube algorithm. Competition in this space is rife, with some of the world's richest companies piling cash into developing fully self-driving cars. Take Zoox, for example, an autonomous mobility startup, which Amazon offered to buy for $1.3 billion. Also, these cars do already exist, and it's not a pipe dream, more so just not mainstream yet and not accepted by the majority of society. It's just like when nobody believed that fully automatic gearboxes would be rolled out so widely. And now we find ourselves in a situation where most people can't even do without an automatic gearbox, they can't even drive a manual car. In terms of how this could affect the investment landscape, who knows? But based on the front runners at the moment and the likes of Facebook snapping up emerging companies like hotcakes, it could spell a massive mix-up to the automotive industry, as well as energy, other transport sectors, and even land use as well. Alrighty, next up, number 4 is the growth of cloud computing. Cloud computing, for anyone who isn't 100% sure what it is, because trust me, I know how confusing it can be with the likes of iCloud and things like that, means storing and accessing data over the internet instead of on your mobile phone, your laptop, or your hard drive. So we're not just talking about the storage, which most people are pretty familiar with, but also the ability to access a computer remotely as well. An example of this is that, say you're doing some really serious editing work and your computer is not powerful enough to handle it. You can remotely tap into another computer on the cloud that will remotely help you manage that workload. Imagine YouTube and Instagram, for example, two of the most widely used social media platforms in the world, where over 1 million hours of video and up to 95 million photos are uploaded every day. Yep. Not a typo. All of this data is stored and it's also managed somewhere, and it sure as hell isn't on Instagram or YouTube's employees' laptops. That's for sure. As for the future of cloud computing, the last few years, and especially since COVID-19, there has been a massive shift towards even more companies switching to the cloud services. And actually, Satya Nadella, CEO of Microsoft, actually explained that during the pandemic, they've experienced 2 years of growth in terms of cloud computing in just 2 months. Now, when you consider how much technology is constantly evolving, and that in 2019 alone, global spending for IT was around $3.7 trillion, then even if a small proportion of these companies start to make the switch toward cloud services, it's going to have a huge impact on the bottom line for the service providers who are providing these cloud services. Alrighty, moving on to number 5, which is the emergence of crypto as an everyday currency. Now, according to FinTech magazine, the latest figures valued the cryptocurrency market at around 240 billion. That's in 2019, and is up almost 50% from back in 2018. We're seeing investors become more and more attracted to this previously obscure currency that many thought you would only ever see in a James Bond movie, for example. And with the likes of one of my favorite YouTubers, Andre Jig, go check him out, explaining why he's invested recently $133,000 into Bitcoin, I think that more and more individual investors are going to jump on board as well. I actually purchased my first Bitcoin in May this year, and I'm currently up 93% on the position, which is just insane. And whilst it's almost painful to buy more now, I'm seriously considering it because we're seeing really encouraging responses from political decision makers, central banks, and financial regulators as well. Even PayPal announced last month that they're going to begin to support cryptocurrencies from later this year. Maybe one to watch. Square also purchased 50 million worth of Bitcoin just last month too. And this is not just in the US, it's not just the US companies and US governments that are giving it more attention these days. The UK, France, Germany are also starting to consider what a cryptocurrency framework might actually look like. Having said that, cryptocurrency still is not a 100% sure thing, and the big banks to date have shown very little interest in it. Alright then, so lastly and at number 6 is international political relations, known as geopolitics. Geopolitics have always had the potential to hugely influence future investments, and it's now more than ever that this is true, especially with the US and China trade war and the Saudi Arabia and the Iran conflict as well that could hugely impact the price of oil. For example, the US issued executive orders to ban some seriously popular Chinese apps like TikTok, whom otherwise could have become a huge and serious competitor in the ad space. Domestic companies though, for example, the Chinese domestic company Alibaba is less likely to be affected by any such trade wars with the US. So then, thinking ahead, it may be worthwhile steering clear of companies that are affected or have the potential to be affected by geopolitics, because it could be a company that was expected to boom, but because of the likes of Donald Trump, for example, they could be stopped in their tracks. All right then, to conclude, there are going to be loads and loads of things that are going to happen over the next 10 years. Some that will affect the investment landscape and some that won't. For example, if we think about some of the things that have happened over the previous 10 years and had an impact, Steve Jobs passing away, I truly believe that if Steve Jobs was still around today, the world would be a fairly different place. Not drastically different, but fairly different. Other things that happened included Facebook. Facebook bought Instagram. Adobe committed to their Creative Cloud, which is a game changer for me, and maybe not quite as much as some things that have happened, but still. And then we've also got the Paris Climate Accord that was signed in the last 10 years as well. All of these events are things that have and will continue to impact the world that we live in and our investments as well. Alrighty, so I hope that this video has been a good watch. I hope that it's provided you with value when you think about strategizing your investments into the future. And yeah, please give this video a like, subscribe for more, and I'll see you next time, guys. Cheers.